Let's talk about, is it time to put some commercial property into your portfolio? You may be questioning why. Would I put real estate like commercial property into my portfolio that over the last 5 years or so, the return has been maybe 7% versus stocks that have done far better? Well, the simple answer is the basic investing principle of buying low and selling high. Simple as that. Looking forward, I believe commercial real estate over the next 5 years should get better returns than the artificial intelligence, the tech stocks, all these that are so expensive. They're just so pricey, they can't keep climbing. You want to buy things on sale.
Yeah, a lot of times people, they say they want to buy low and sell high, but ultimately what they end up doing is they buy high in hopes of selling higher, which to me, I don't really like that philosophy.
That's a greater fool theory.
Yeah, that is a greater fool
finance?
theory as
Yeah.
well. Yeah. But kind of looking at the data here from MSCI, that revealed year to date, large investors have purchased $4.6 billion more U.S. commercial property than they sold. That is the first time that has happened in 3 years, and deal activity is still low compared to history. U.S. commercial real estate values, well, they're off from the peak in 2022 and are now down around 17% on average. So, I mean, we have seen, again, a pullback, and we like when things go on sale. This has gone on sale.
And, you know, Chase, when we were first doing that research on this, and I saw that initial number, $4.6 billion, like, wow, that's a good number. And I saw like, oh, well, it's not like that. It's a good number, but it could be much higher. And I didn't find it, but I think the overall commercial real estate market is probably huge, very huge.
Oh, it's got to be trillions.
Trillions, yeah. So 4.6 billion, look at it that way. Yes, a lot of money, but could be a lot more.
And what this could signal is an inflection point. Right. Yeah. So you've been seeing net selling. All of a sudden, this could be the flip of net buying. And then that's where, you know, buying starts to cascade. Instead of 4.6 billion, it goes to 10 billion, 15, 20, 30, 50 billion, you know, and that number starts to climb over the years as we have potentially now seen that inflection point where values turn around.
Yeah. And looking just at the commercial offices, there is a better discount considering they are down around 36% from their peak. Now, history shows this could be a very, very good opportunity. There's only been 2 times over the last 50 years, roughly 50 years or so, when commercial property prices were down more than 10%. You would have to go back to the early 1990s, and that was about 35 years ago. And then who could forget the other one, 2008, the Great Recession, commercial property, residential property, a lot got hit hard that time. But that's only one of the 2 times over the last 50 years that we've seen this type of action being down more than 10%.
Yeah, and we actually do have a office REIT in our portfolio. I'll kind of talk about that in a little bit more detail as we progress here. But in the office space in particular, when we're listening to the CEO and the COO or the chief operating officer talk about what's going on, they say leasing trends are very good in the office space, as long as you have the right properties.
Right.
And I mean, this is the thing when you look at real estate, again, people kind of peg us many times as just stock guys. But when you find good real estate, it's the same thing. You know, if you can find good real estate that is undervalued, good cash flows from the rents, that's what you want to be buying. And I think you can find that in the office space. You just got to be careful. What I was going to say is, the nice thing with real estate is many times it's all based off supply and demand. So what happens is as that office space has really fallen out of favor, well, construction has slowed down quite a bit. You've seen some conversions from office space into retail space or into housing. So what that then means is now there's a lower supply of office out there, which then kind of really helps fix that supply and demand equation. And that's where, again, you can find some good opportunities.
And Chase, this is where you have to know what you're looking at because, again, not all real estate, commercial real estate is equal. And also, too, you have to understand how it works. We talk about rate abatements. There's so many things that you have to understand. The cash flow. Well, gee, the rents are down. You have to understand that. Maybe they signed a new lease for 7 years, and they're giving the new tenant a 7-month free rent to get in there. Well, they're not going to collect rents for 7 months, but then it will pop up later. You've got to, even when it comes to stocks, businesses, you've got to understand things. You can't just do a 5-minute analysis and say, oh, this is going to be great. No, you got to do your homework.
Yeah, and you know, maybe now you're listening saying, well, how do I invest in the real estate?
That's the important part.
The best and easiest way, and the way that we actually do it at our firm, is to use public real estate investment trusts, which are known as REITs. I talked about that office REIT that we have in the portfolio. It is public. Please do not let your broker sell you private real estate of any sort so that they can then get paid a big commission. REITs that trade on the market are commission-free and completely liquid, unlike those private real estate deals. And with public REITs, you can many times receive good investment yields between 4-6%. I know we have some great REITs in our portfolio that are paying around that range. And the thing that you have to understand, you have to put up with volatility with the public REITs. But again, you can get in and get out of them. There's no difference. You do own the real estate with the public REITs. It's not like, oh, it's some gambling chip. No, you own pieces of the properties that are owned by this real estate investment trust. It's a great way to get exposure.
Yeah, and I would say it seems to be quite frequently we talk about do not get into the private REITs, do not be sold the alternative REITs, and all these things that brokers sell you. We still continue to see new clients come in. Yeah, I got this stupid REIT. I can't get out of it, and people don't realize. And the brokers, there's some great salespeople out there. Oh, this is different. Whatever they say, we got to keep hammering that home, because the only person that benefits from the private REITs generally is the broker, who gets probably a 4 to 6% commission depending on what type they sold you.
Yeah, and it's just difficult, because if the real estate market turns, and I don't like to obviously sell things, but if you need to sell, you can. Where with the private real estate, things turn unexpectedly. You're locked in. You can't get out. And you think the REIT is going to want to give you your money back when things are going poorly? No.
And also how they value that's another thing too. However, make sure to understand the fundamentals to ensure that dividend yield is safe. A history lesson shows that commercial property underperformed from 1997 to 2000 when the tech boom was happening. But when the tech boom ended and went bust, guess what? Commercial real estate did very well. Could the same thing happen now, as there are signs that the AI rally could end? Well, if you do invest in a good quality public real estate investment trust, you should have at least a 4 to 5 year time horizon to hold that investment. Don't think you're going to get into it and you're going to buy the REIT at $10 a share and next month it's up to 11. That's just not going to happen. It's just amazing how people forget about the long-term investment. That's how you do well, by the compounding, buying good quality, not hitting the next home run that goes up, 30, 40, 50%. I think Oracle was way up, and I think it went way back down again.
Yeah, I mean, it's fallen, I think, like 40% or something from its highs. And, it's had an all right year, I think, still positive. But at one point, it was up like 80% or something crazy.
And you have to realize with investing, the reason why it went up is because people were buying it on the way up. So there's probably a lot of people that have overpaid for it, and they're now underwater because they got sucked into that hype we talk about.
Yeah, just because people have made money on Oracle this year doesn't mean everybody's made money on Oracle this year.
Good way to put it.
Yeah.